Today is June 23rd, 2026. It is 3:35 p.m. Pacific time as I'm recording the video, and I think WPP may be one of the most fascinating macro shorts hiding here in plain sight. And although we had a big leg drop there on the monthly interval, and not only because the technicals and or the charts look terrible, but because the company could be on the verge of going bankrupt. And because I believe we may be watching a collision between an old world business model and a whole new world reality through artificial intelligence. And when some of those collisions happen, entire industries can wake up one morning and realize that they are no longer being valued for growth. And here we are banging on the door of the 1997 levels at the 1694 handle. And what Wall Street is saying here on a crash of 84% off its highs is that it is being valued here for survival. And that's the beginning of the chart, zooming in into the daily interval, but off the monthly, you sort of had a neckline off the 90s era. You had a clean, classic head and shoulder looking top. And upon zooming in here to the daily interval, it is a very significant and telling key inflection point. And for months on end here, WPP has been grinding higher off the March lows here with a beautiful ascending trendline price support level, making a series of higher highs and higher lows throughout this span of time, recovering momentum. And what shifted here is you have a nice big divergent high, negative and bearish divergences that now are confirmed on a clean price percent oscillator, bearish crossover testing its zero line threshold, where bulls had every reason to believe that the worst was over until now. With the split of the 50-day moving average and this ascending price support level, you have a solidified breakdown sell signal. This is a massive red candle with massive volume, sell volume, and a trend line that was violently violated here. And this is the type of candle that will get the attention of the algos, machines, traders, and longer-term investors because of where it has happened psychologically. And now the question arrives is, was this profit taking off of a multi-month rally? Or was this the first crack of a much larger drop to come? Because fundamentally, I think the story is getting extremely bearish. The advertising agency sells something far more fragile, which is attention, narratives, marketing, advertising, and influence. And for decades, this was a phenomenal business throughout the span of time during the 90s, the dot-com era, and into the late 2000s, where these agencies completely built their campaigns, bought the media in the grip of their hands, managed the brands, and collected the tolls on the fees, and then headed right into the 23, 24, call it the AI era. This is where the shift ultimately happened, where artificial intelligence has completely arrived. And now it's up to the point of if the advertising agency can survive. And how much of the traditional agency model does AI permanently eliminate? How many of the ad planners it's going to take away, or the billable hours, or some of the layers of the bureaucracy? And this is a company straight from the United Kingdom. And when the market starts questioning a business model rather than quarterly earnings, valuations can get replaced really quickly throughout this span of time that we've seen. And you have a lot of people out in the United Kingdom who want to make Keir Starmer act, or Keir Starmer the entire story, but I won't. I do believe Starmer acts as gasoline on the fire here off this advertising agency, because if the United Kingdom continues to struggle with weak growth, weak productivity, the rising taxes of the Labour Market Party, the political uncertainty, and the decline in the business confidence, what will corporations ultimately do? And they will cut cost. And one of the first cost corporations that always cuts before a slowdown are advertisement agencies. The ad budget is often one of the first victims of economic uncertainty, because you already had multiple moments where the management's view of the future turned out to be too optimistic. And eventually traders and short sellers will begin to go around the questions. If management cannot accurately forecast its own business, then why do I trust my money inside of this stock or a stake inside the advertisement agency? And if investors stop believing and levered traders in longs stop believing, then that is one of the most valuable assets that any public company possesses. And make no mistake about it, this was a solidified breakdown sell signal with a huge volume profile where the vast majority have piled in at the top of this clean divergent high. And they are already about 10, almost double digit percentages underwater. And if this breakdown begins to accelerate and volume continues to expand, I believe the market may be telling us that something much larger could ultimately come on a multiple double-digit crash with a slow and creeping realization that the future is no longer arriving where everyone expected it to. Because ultimately, capital is a migratory animal. And taking out that sell signal is just a frightening thing to look here throughout the velocity of this red candle, where volatility is now ultimately grasping this price of this stock by the horns here. And if artificial intelligence continues devouring some of the billable hours, some of the businesses that continue slashing their marketing budgets, if growth continues evaporating with the British economy simultaneously, well, then this advertisement agency may ultimately become something far more sinister than just a broken stock from the spot price dating back to the late 90s. And when enough traders out of Wall Street reach the conclusion at the same time that markets stop functioning off the auction, then they begin functioning like full-blown fire alarms. And nobody is going to ask what the valuation is when the smoke starts filling the room. They'll simply all rush towards the emergency exits.